And every single one of them, Stephan, every single one of them said it's worthless. It's nothing but a Ponzi scheme. There's no underlying value. Don't put your money in it. It's a total scam. You'll lose all of it. Just move along. It's just basically it's a meme coin, basically. I like to say, thank you so much for warding me off of Bitcoin at $3,000. And so I ignored it. And to my own detriment, I listened to the so-called experts on the street who had no clue what they were talking about. Absolutely no idea. All they were doing is listening to each other in a little echo chamber saying it's worthless.
In the chaotic aftermath of the great financial crisis, few had a clearer view of the system's cracks than James Lavish. A seasoned hedge fund manager with deep ties to Wall Street, Lavish lived through the bailouts, the backroom deals, and the market distortions that followed 2008. He profited handsomely from the chaos, but what looked like a winning trade at the time eventually revealed a deeply flawed financial system, one built on manipulation, asymmetry, and debt-fueled illusions of growth. Like many insiders, Lavish wasn't searching for a new system until the old one started to collapse from within. At first, he dismissed Bitcoin because every so-called expert in the institutions he trusted told him it was worthless. A Ponzi scheme, digital nonsense. But as Bitcoin refused to die, growing stronger with each cycle, he started asking the questions that traditional finance couldn't answer. Why does this technology persist? Why does it attract some of the smartest technologists and investors in the world? And most importantly, what if the real scam wasn't Bitcoin, but the system he had helped uphold for decades? Today, Lavish calls himself a reformed hedge fund manager, and he's not alone. Michael Saylor, a former top player in the traditional finance world, has gone all in, famously converting MicroStrategy's balance sheet into Bitcoin and predicting it could hit $5 million per coin over time. Fidelity, BlackRock, and a growing list of institutional giants are entering the market because they understand what most skeptics have yet to grasp. Bitcoin is the greatest and probably the only proven insurance against the failing fiat system. And here's the truth. It's not too late. While early adopters bought Bitcoin at $3,000 or even $300, today's price is just another milestone on a much longer timeline. As of this recording, Bitcoin hovers around $118,000, and the next halving, global monetary debasement, and wave of institutional adoption will undoubtedly push prices even higher. The only question is whether you'll look back at today's price as your missed opportunity, or your point of entry. James Lavish's journey is one of disillusionment, awakening, and ultimately redemption. Whether you're a tired investor waiting for the market to move, or a cautious skeptic still sitting on the sidelines, we hope this story gives you the perspective and the conviction you need to make your next move. If you're finding value in this video, don't forget to like, subscribe, and drop your thoughts in the comments. Thanks, and enjoy the video.
No, I wasn't looking for an alternative system because the reality was, Stephan, is as those trades were blowing out, remember, we're in arbitrage. Like I said before, we don't care what happens in the market. As long as these trades, as long as these mergers close or the bonds that we're trading around are viable, as long as the market can rarely impact a bond like a convertible bond, whether or not it's viable, unless there's an underlying issue with the company. So we were, at the time when this was happening, we were kind of just picking away at spots and just adding more and more and more and more and more exposure to all of these opportunities. Well, of course, when long-term capital management effectively gets bailed out, not they didn't, but the Goldman did, and it saves the street from having to blow out everything because of this counterparty risk. Well, everything just goes right back up to where it was prior to the long-term capital management implosion. And so we made a killing. We made an absolute killing that year. And so is it fair? Well, I mean, in the greater scheme, no. But for what we were doing, we did nothing illegal or unethical. It's just we saw an opportunity in the market and we were just like, well, they got well, good thing that we were there buying all this stuff before Goldman got bailed out, because it snapped right back up to where it was supposed to be. So, you know, and we had no idea that they were actually meeting with the Fed. We found out afterwards. It was like, oh my, like, wow. Well, the Fed kind of saved our ass, meaning short term, but not really. Like, it doesn't matter. They were going to close anyways. But the point of it is, we were able to make a lot of money off the opportunity. So the question is, did I realize that this was an insidious kind of system? No, I didn't. Flash forward, keep going, go to the 2008. The crazy thing is, when these CDS spreads these CDS trades were going on, Kyle Bass came and asked me and some other people if we wanted to be involved in this trade. And I was at a firm that, fundamentally just wasn't, they just thought, their attitude was, we can't make money off of other people's misfortune. Okay, that's honorable. Reality, it's not exactly what happened with Kyle. I respect Kyle very much. I'm friends with him. Once again, the Fed comes in and bails everybody out, which would not have helped him. He was obviously looking at the other side of that trade, and these things collapsing. But that's when it really kind of that lens solidified for me. How much the money, the market, how much the money is manipulated. That's when it really came into clear view for me. But I was working in a firm that wasn't really positioned to do anything about that. But we had a small hedge fund and mostly private equity at this point. However, just keep stepping forward. Now it's 2013, 2014, 2015. And my wife, 2015, 2016, somewhere in there, I think. It could have been as late as 2017, but it was early enough that Bitcoin was trading in the, at a very low value, in under 1,000, I think. And my wife said that she was listening to a podcast with Tim Ferriss.
Okay. Yeah, of course. Yeah.
And she said, hey, they're talking about this Bitcoin thing. I think you ought to check this out. And I'm not arrogant, but being the financial wizard of the family, I'm like, honey, don't worry, I'll take care of the investment, And I kind of brushed off. I laugh about it now, but I didn't really take it seriously. Not her, but I'm like, who knows? Tim Ferriss, 4-hour work week. I mean, what
magic internet money.
Yeah, it sounded like a get rich quick. It sounded like a scam coin or whatever. I didn't know. So, but that stuck in my mind. So now flash forward to 2018, and Bitcoin had gone to 20,000, came all the way back down to like 3,500, and so. And I had this an extra amount of money that I want to invest, and I had my regular funds. I have my investment fund. I've got money in the fund that I'm helping manage. I've got some private equity, but I wanted to go out in the risk curve a little bit. I wanted to do something different. I want to go and do something that's completely different, uncorrelated to everything else I was doing. And it was nagging in my mind, this thing, Bitcoin, because I keep seeing it come up. Yeah. Well, you pull up the crypto page on Bloomberg back then, and it had a list of all these things, and it had Bitcoin, Bitcoin Cash, and all this other stuff. And I was like, I don't even know what the difference is here. So I go and talk to some of the experts, because I'm in Wall Street. I'm an institutional investor. I have access to anybody on Wall Street, and I start calling around to the different technology analysts and portfolio managers, and because these guys they're the ones who understand this new technology. What is it? Is this something is there anything here? Because I'm looking and I'm like, there's got to be something here. This hasn't gone away. And so, and every single one of them, Stephan, every single one, every single one of them said it's worthless. It's nothing but a Ponzi scheme. There's no underlying value. Don't put your money in it. It's a total scam. You'll lose all of it. Just move along. It's just basically it's a meme coin, basically. And so, And I like to say, thank you so much for warding me off of Bitcoin at $3,000. And so I ignored it. And to my own detriment, I listened to the so-called experts on the street who had no clue what they were talking about. Absolutely no idea. All they were doing is listening to each other in a little echo chamber saying it's worthless. Oh, it's worthless? Oh, okay. But CNN says that, CNBC says it's worthless. And so does, Bloomberg says it's worthless. Okay, so it's worthless. And so they're just climbing all over each other with misinformation, disinformation, not understanding it, no clue how it was decentralized, how it was actually, it was a protocol that was immutable. Like they had no clue how it all worked, how the mining worked, nothing. And so unfortunately, everybody gets Bitcoin at the price they deserve. And I did not deserve it then because I didn't do the work properly. It's my own fault. I stayed in my echo chamber.
When James Lavish first came across Bitcoin, it was trading around $3,000, a rounding error in the grand scheme of institutional finance. But rather than investigate it further, he did what most professionals in his position would do. He called the experts, the Wall Street analysts, the tech sector portfolio managers, the people paid to understand emerging trends and separate signal from noise, and every single one of them dismissed it. That chorus of doubt came not from malice, but from ignorance. These weren't deep technical thinkers or Austrian economists. They were financial generalists, repeating what others had said before them, locked in an echo chamber of outdated assumptions. Lavish, like so many others, took their word for it, and missed one of the most asymmetric investment opportunities of his lifetime. This pattern isn't unique to James Lavish. We've seen it for over a decade now. Mainstream media headlines and traditional finance personalities recycling the same tired warnings, no matter how much Bitcoin matures. Take Peter Schiff, for example. He's been sounding the same alarm since Bitcoin was under $10,000. According to him, it was going to zero in 2013, then again in 2016, and again in 2020. Fast forward to today, Bitcoin has crossed the 100,000 mark, and Schiff's argument hasn't evolved an inch. No acknowledgement of Bitcoin's resilience, its adoption curve, or its role in macroeconomic hedging. Just the same old refrain, don't buy it, it's not real, it will crash. And that's the real danger. Not that people are wrong, but that they refuse to update their views in the face of new information. Bitcoin has been declared dead over 474 times by mainstream outlets. Yet here it is, stronger than ever, becoming a cornerstone of modern portfolios and a serious geopolitical asset. Thankfully, Lavish didn't stay in that echo chamber forever. The seeds of doubt had already been planted. His wife brought up Bitcoin. Then his son, surrounded by brilliant peers at Cornell, urged him to look again. And this time, Lavish didn't ask the experts. He started doing the work himself.
But I wasn't sure what I was going to do after I left that firm. And so, which was in Fort Worth. And so I was kind of searching around. I was talking to people. I was doing some things. And my son, who's at Cornell at the time, he's at the time he's a sophomore at Cornell, and he's surrounded by really, really smart kids. And he said, "Hey, Dad, I know you're not sure what you want to do yet, but I gotta tell you, this crypto thing seems real. I mean, it's cryptology. Like, you should like go check it out because I think there's something here for you. I think this is growing rapidly, and I think this is something you ought to check out." So, okay. And so he said, "Here are the things you need to look at." And he told me he had bought Bitcoin and wrote it all the way up, sold it, bought ETH and Solana. Anyway, so I buy some ETH, I buy some Cardano, I buy some Bitcoin, and I start doing my work on it, and I start listening to people. I'm watching all your big hitters on YouTube, trying to figure it out, like what protocol really means. Bitcoin seemed boring. It was big. It was old. It already had its run to its new highs. What is out there that's really exciting and new? Technology, right? And so it took me but one video from Michael Saylor to understand what Bitcoin was. It was a short video. I can't remember exactly who it was with, to be honest with you. He's done thousands of them, or hundreds of them. And so I start migrating towards Bitcoin, and I'm like, okay, this really is the one that makes sense. And so I take what I've invested in there into Bitcoin. I start doing research on Bitcoin. I'm listening to Bitcoin podcasts. I'm reading Bitcoin blog posts. I'm on Bitcoin Twitter. Don't know anybody. I have like maybe a couple hundred followers. And I'm just following a bunch of people, who I can, to start like reading about it. And something pops up. I'm following Pomp, and Pomp has this interview with Jeff Booth. Okay, so I'm sitting on the edge of on my bed. I've got the video playing, and I'm sitting on the edge of my bed. My wife's out making dinner or whatever, and she's like, and I'm the one who usually cooks, actually, so this is really unique. But she's like, hey, what are you doing? You want to come help? I was like, hold on a second. Actually, can you pause that? Come here and look at this. So I'm like 20, maybe 30 minutes into a 40-minute video. I'm like, you got to see this. And she's like, what? So I rewind it, and we watched the whole thing all the way through on the edge of the bed, just with my laptop, And at the end of it, everything kind of clicks into place for me, And she looks at me and she goes, oh my God, do we own enough? I'm so sorry that I ignored you so years ago. But anyway, so the point is, what clicked for me? What clicked for me, Stephan, is the idea that, okay, I get Bitcoin. Okay, I get why it's immutable. It's decentralized. Okay, store value. Okay, I get it. Digital gold. Okay, I get it. But what? What's the catalyst here? And so what really made, and I've told Jeff, I'm good friends with Jeff now, and which is really kind of neat now going forward because our community is so small. But and I've told him this, and what really clicked into place for me was this idea that we have, the natural progression of technological advance means that you've got technology that's doubling in efficiency every 4 years. Is that right? Moore's law.
Yeah,
and
something.
and I don't want to quote it wrong, but basically the massive advances in technology are happening, right? And as those advances in technology are occurring, you have increased productivity for less energy, basically, So we're creating more through technology with less input. We're getting more output. Yet at the same time, you've got this system that depends on inflation, which means you need to have like the productivity has to rise in order to tax whatever. But basically, things have to become more expensive, okay, in order to manage the past debt, because you need more dollars to pay off debt that you've just amassed. So you've got this increasing pile of debt, and so you've got this force that's inflationary, which is the market manipulation. So now go back to my real life lessons in 1998, and then 2008, and then in 2020. Now you go back to the real life lessons of, oh my God, they're expanding the money supply so rapidly. So that's happening over here. While over here, you've got the advancement of technology that's creating deflationary forces. Like you're getting more for less. And they're colliding. And so what is the answer? The answer is Bitcoin, because it can't be manipulated, and it will allow for this, utopian future of us creating so much output for a lot less work. And so, but the money is it's so corrupt, it's so manipulated that it doesn't allow for this to occur, but Bitcoin does. And so it's not just an investment, it's not just a store of value, it's actually the answer to that question of why are our lives not getting better even as technology advances so rapidly? How is that possible? Well, it's because of the manipulation. And this fixes it.
James Lavish's journey from institutional insider to Bitcoin advocate isn't just a personal revelation. It's part of a broader shift that's reshaping the financial world. What began as an obscure, misunderstood experiment in digital scarcity has evolved into a globally recognized monetary network with billions in daily trading volume, integration into sovereign policy discussions, and now, serious institutional backing. Today, Wall Street's posture toward Bitcoin is no longer outright dismissal, it's cautious acceptance, and in many cases, full-scale adoption. In 2024, BlackRock, Fidelity, Franklin Templeton, and ARK Invest all launched or backed Bitcoin ETFs, signaling a tectonic shift in mainstream credibility. We're not just talking about a fringe asset anymore. We're watching the financial rails being rebuilt in real time. Trillions of dollars in capital are now eligible to gain exposure to Bitcoin through regulated vehicles. What used to be the playground of libertarians and cryptographers is now embedded in the portfolios of pension funds, family offices, and nation-states. And yet, we're still early. According to estimates by analysts like Willy Woo, less than 5% of the global population owns any meaningful amount of Bitcoin. MicroStrategy CEO Michael Saylor, one of Bitcoin's most vocal bulls, believes Bitcoin's price could reach $5 million per coin in the coming decades, not as a moonshot, but as a rational outcome of persistent global debasement, energy monetization, and digital scarcity. His near-term target? Anywhere from $500,000 to $1 million this cycle, driven by halving supply shocks and insatiable institutional demand. Fundstrat's Tom Lee echoes that sentiment, pointing to Bitcoin's historical post-halving patterns, explosive inflows from ETFs, and millennial investor interest as catalysts that could send prices well above $250,000 before the current cycle is over. And beyond price targets, analysts like Raoul Pal emphasize that Bitcoin is becoming a platform for capital formation, a new base layer for how money, identity, and trust are organized in a digital economy. But beyond the charts and forecasts, the core reason for Bitcoin's rise is this: the fiat system is not just flawed, it's exhausted. Endless debt ceilings, money printing disguised as monetary policy, and a growing wealth divide have pushed people, like James Lavish, to search for alternatives. Bitcoin is more than a hedge. It's a parallel system, immutable, transparent, borderless, and resistant to the very kind of manipulation Lavish saw firsthand in 1998, 2008, and again in 2020. So if you're still watching from the sidelines, wondering if it's too late, the answer is simple. You're still early if you understand what's coming. The world is waking up to the idea that trust in institutions can fail, but trust in math, in code, and in open systems can endure. And as more investors, institutions, and sovereign entities realize that, Bitcoin's trajectory is likely not just up, but exponential. Drop a comment below and let us know what finally helped you take Bitcoin seriously, or what's still holding you back. This is a conversation the world is finally having, and we'd love to hear where you stand. If you found this video helpful, make sure to like, subscribe, and share it with someone who's still doubting.